Okay guys, so the Fed, a pretty big deal last night. Most people, or the talk that so often has been going on is the Fed pivot. Will they do it, won't they? When the pivot basically means, will they turn to a more loose policy, i.e. stop raising rates and the next move's going to be a cut. In fact, what you almost got was a Fed pivot that they went from hawkish, raising rates, to raising rates more. And that was the big change. However, it didn't start like that. So whenever you're trading a central bank announcement, one of the key things is to understand the little subtle changes in language. And these tiny changes, a few words here and there, are ultimately where the trades come from. What I'm going to do is illustrate why you got the big run up in the S&P and the 5-year that you can see on the chart, and then why you got the reversal. And this all hinges on a few tiny shifts in language. Now, to begin with, at the release of the policy, you get the policy change and the statement. We all knew that 75 basis points was going to be the hike. But what we were interested in is, did they change their guidance? I.e., how are they going to move rates going forward? And the key change here comes highlighted in red or underlined in red, that they kept their reference to increases in the target range will be appropriate, but they added an additional bit. They determine the pace of future increases. They'll take into account the cumulative tightening of monetary policy and the lags with which policy affects economic activity and inflation. So what they're basically saying is, yes, we will keep on raising rates. However, we will also consider some other things, which has not been in the past. So essentially, this new line is the dovish tilt, i.e. they are not going to raise rates as fast as one would think. So that's why you get this very fast run up as the initial policy release comes out. That's a trade opportunity. That was a reasonably big one. It was tricky though, and I'm sure many of you are looking at the chart thinking, well, what was that spike down all about? Well, the spike down was about the fact that they kept in the line that ongoing increases will be appropriate. And that was something that people were looking at possibly being removed. And so that gives you the whip down, then you get the charge back up. And that's where your opportunity comes. You read the statement and you get the trade on that. Then it's over to the press conference. This is where we know that Powell has brought opportunity throughout this year. The press conference is where the action is. Typically, though, we've seen the press conference actually give a more dovish tip, a kind of pullback on perhaps a slightly hawkish initial reaction. So, what does he do in the press conference? And again, it all hinges on a couple of key words. About 5 minutes into the press conference, he comes out and he says, we still have a ways to go. And this is one of Powell's favourite, annoys you as an English person. He adds an S on the end of ways, but ways to go on rates. And suggests then that the ultimate level of rates will be higher than previously expected. That's it. That's all you need. You don't need to know anything more about the Q&A, the statement, any more elaboration. That's it. Basically, what that means is rates are going higher. If you thought they were going to X, they're actually going to X plus Y. That's what everyone's interested in. And so that tip to they could raise rates more than we thought is exactly the turning point. And that's what you get, where you get that one big red candle down that's highlighted on both the two charts, and then the continuation down after that. That was arguably the bigger opportunity. It's a more subtle trade. It's one that you have to be very aware of his language and the way that he talks to be able to trade. But that was the big opportunity, and that was where our traders really sort of made their money. So what do you do now? This is all well and good saying, oh, well, this is what happened here and this is what happened here. So great. But if you didn't know that, what can you do about it? Well, here adds some more information, which now tells us what's important going forward. He suggests that the pace of hikes is not the important thing anymore, and it's about how far they need to go on rates, i.e., where is this peak rate? We all thought, and I think I say we, I'm talking about the market as a whole, everybody thought that the peak rates would probably be reached in December or maybe early next year. The fact that they're still talking about how high they need to go implies that there is scope now to raise throughout 2023. Or at least we're not going to see the end of hikes necessarily that quickly. So that's then the key question now. How much further do they go? Which means that going into future meetings, that's the question you need to answer. There will become a point where he indicates that there are no more hikes. And that's then the end of the hiking. But it's almost that pivot isn't going to be a sharp pivot. It's just going to be a steady, there will be no more hikes. And you'll see this coming. So that's the one sort of big opportunity to watch out for. But what it does mean is that we're going to have an open-ended questioning at the next few press conferences of, have we reached the peak yet? Is there more to do? And this then is what's going to provide future opportunities. So as a trader, this is great because it keeps alive the opportunities. If you get to a point where they say, that's it, nothing more, then we end up with this dull period where you wait until there then comes a tip to a new scenario. Are they going to cut? Are they going to hike? And that's almost what you had through 2019. He brings in the reference of patient, and nothing happens for 6 months until they then start to indicate rate cuts. One thing that he has highlighted, and this is the final thing to point out here, that they are more concerned about over tightening than they are about essentially the economy. So what they're basically saying is, we'd prefer to do more and then cut rates than to not go far enough to start with. So there's going to be this constant open opportunity now of them still potentially going to be doing more in the future months. And arguably, it may well provide more opportunities in terms of how much more, because that's going to be the uncertain bit in the next months. Will it be 50? Will it be 25? Will it be 75? Is going to be the question going into all of these meetings going forward. So it's not just about saying that's what caused that, that's what caused that. It's about saying, right, what's the opportunities going forward on this? This is what everyone's now going to be thinking about going towards December. So start thinking about that now. Get yourself ready for December. So if you want to hear a few more summaries of central banks, we'll be doing a few more of those in the coming weeks and months. So if you want to see those, click subscribe, click on the notifications, and also check out the link below. You can come to a free workshop and you can see how we go about planning trades from a more technical side of things, even if central banking isn't for you. Okay, guys, I'll see you all very soon. Take care.